Welcome to Controllers Classified, the podcast where we take a deep dive into the dynamic world of controllers, accountants, and finance leaders, and hear how their ever-evolving roles are redefining accounting and the future of business. And now, here's your host, Erik Zhou.
Welcome to Controllers Classified. I'm your host, Erik Zhou, the Chief Accounting Officer at Brex. And today, I'm really excited to bring on Jake Jones, the controller at FinQuery. Now, it's not often that I get to speak to another accounting professional, controller, CAO that has a very, what I'll call a meta job, right? Because at the end of the day, even for me, I work at Brex, and part of Brex's product is to provide accounting solutions to some of our customers. Jake, you're an accountant, and you also work at a company where you might be the number one customer.
Hey, exactly.
And so I think that's really cool. Maybe just to kick off, tell us a little bit about how you got to where you are today.
Yeah. So, went to the University of Georgia, go Dogs. So graduated from there with my accounting degree. From there, I went to work for Cherry Bekaert, who's I think they're, top 25 accounting firm. And so I did about 10 years with them in their audit practice. And so during that time, I primarily worked with SaaS companies, everything from startups, companies getting their first year audit, all the way through some publicly traded companies, doing some SOX compliance work for them. And so, got to see a little bit of everything, but really focused on the software side of things. And so after I'd been with Cherry Bekaert, made it the senior manager, decided to make the jump over here to what was FinQuery at the time. We've since rebranded to FinQuery. And so I've been with them now almost 3 years in the controller role. So coming in here, really trying to put in a lot of good processes and controls in place, build out the team to get us to where we are today, and to continue to grow and scale as an organization.
Let's talk about FinQuery a little bit more in a bit. First, you left something out in your intro, like you made Atlanta Business Chronicles 30 under 30, and I love being an accountant, but it's just not that common to see for folks, in the profession. So maybe tell me a little bit more about how that happened.
I'm originally from a smaller town, actually doing the podcast for me today down in Tifton, Georgia. So I live in Atlanta, but visiting my parents. And so, after I moved over from University of Georgia, Atlanta, I knew, I didn't have a great network. A lot of people, going to school at University of Georgia or come from Atlanta, go back to Atlanta, have a lot of connections there. And for me, knowing I did not have that, early in my career, I was very, made a concerted effort to get out there and network, meet people. So I really started that through doing some stuff with the Technology Association of Georgia. And so, led their young professional group for a number of years as the chair. We had like an awards show we did called the One in a Millennial Awards that we would put on, and, really met a great group of people through that and allowed me to network. And then from there, I've done some stuff with the Association for Corporate Growth, the Georgia Society of CPAs I'm still heavily involved with, and really just like attending networking events, getting out there and meeting people. And that's really, something I'm really proud of today is building that network.
I mean, Jake, I think that's awesome. Like, the one thing I'll say is what I heard is that you are a community builder, and I think you're an influencer. So I right? Like, and I think for our profession, especially the last few years, all you see in the Wall Street Journal is this article about how, we used to be 1.9 million accountants in the US. Now it's 1.6. I think it's really important, the work that you're doing here. And I know it's off the side of your desk, but building this community, supporting the accounting profession, the finance profession in general, these are things that I think are actually necessary for the health of our industry.
Mm-hmm.
And so thank you very much. Honestly.
Yeah,
that's great.
No, and yeah, it is. It's great. And, just saying, it's very easy to get your CPA and forget about it. But there's so much changing with it even now with the, the hours requirement and potentially the, having the 150 hours and, just staying up to speed on that. So you can, one, know what's going on, but two, like encourage other people to get into the accounting profession because, but you can see so many paths it can take you, right? Having that CPA and that accounting background too.
Let's move on to FinQuery. which used to be called LeaseQuery. I recall getting emails from LeaseQuery to kind of help me with my ASC 842, so lease accounting process. Maybe tell me a little bit about like what you guys do now. Now you've rebranded. What's the offering today?
Yeah, it's, as I'm sure you know, the ASC 842 was really a compliance-driven standard for most companies, right? There was a deadline. Private companies was, way back in 2018, and our public companies, private companies, was here a couple years ago. But we had a big push for people, needing a software, needing a solution outside of Excel, because Excel, you can make so many errors. These are some complicated, tables you're building out for these lease payments, and that was our main solution. But once we've gotten past that compliance deadline, there's still people out there looking for that solution. We have a very strong product, so we're able to go up against some competitors where maybe people haven't been happy and get some additional business there. But we had to really step back and say, what's next for us? And we already have a lot of the lease contracts in our system, so we said, okay, like what are other contracts and spend that companies have? And so the next product that we rolled out was our contract management tool. And so it's built kind of off of the LeaseQuery platform, but it allows you to put in any type of contracts. We're primarily focused on vendor contracts, but you put in all the terms, you put in the payments, and that way you can do forecasting based on the payments of those contracts if they're multi-year. You can go in, all the contracts are in one repository. They have reminders they can send out to to the people in the company of when things are going to renew. And we actually just rolled out our prepaids and accrual functionality, which sits on top of those contracts and will allow you to do your prepaid and accrual entries right in the system. And so that's
awesome.
something we're super excited.
We got to have a conversation after this on the other thing to help my team out. Honestly, yeah. Like I care actually very deeply about our procure to pay process. And I think, a wise controller once upon a time told me the key to getting your close done faster is actually getting all your expenses done as quickly as possible. And so if that's the focus, like getting the vendor contracts, and frankly, some of the contracts I look at, it's not just an SOW. Those are easy, but there is some contract and some terms in there. And so, if that's a time saver, we should definitely talk.
No, for sure. And we have our AI, enabled also. So it'll go through and do that first pass for you to try to pull out those terms.
Tell me about that. Is that a change that happened over the last couple of years where did you have a LeaseQuery product, right? Which was focused on reading these lease agreements. But now that you have Gen AI, is that what helped you like expand the product, so to speak, more easily? Like, tell me about the journey there and how technology has helped the progression.
Yeah. So, we were actually very early on the AI side of things. We, back in, was it early 22, we had already been working with a company to build out an AI, lease learning engine there that they could read and ingest these contracts and pull out terms. And so, end of 22, we purchased, brought it in house and made it live on LeaseQuery's platform. But that model was more of I'm not going to know all the technical terms, but it only learned from the contracts we fed it. It wasn't I guess like large language model, or didn't pull from, the internet and other sources. And so it was right after that when things just started exploding, right, in the AI space. And so since then we've revamped the model to use some of that more publicly available, what would you call them, like data sets and all, like Google's Llama and Bedrock that they have out there, and use some of that to revamp our model, keeping the same interface. And it's really great. And I think ours is actually better than some of the other ones out there in the space, because it'll actually kick back, like it says, hey, these are what we think are the terms here, and it relies on the end user to have some input. Some of our competitors, it'll just pull what it thinks, and you'll think it's done, and it won't be the right clause, it won't be the right section. And so we really try to still have a little user interaction. You don't have to read the whole contract, but it's going to, use the AI to say, hey, yeah, is this right? And then you verify, which has been great for our customers. They've really enjoyed having that where it has the final check being them, instead of it just trying to tell you what it thinks and be done.
Yeah, I have a perspective on like thinking through leveraging AI or generative AI for more of our processes. if I get an output from an AI, I actually look at it not as a quote unquote automated output, but as an output that I would get from another staff.
Mm-hmm.
Right? Like when you have a human doing manual review and pulling out terms and writing it down, right? There's usually a check process where you're actually going back and like double checking that these terms actually make sense versus the contract. Like that output that I'm getting from the AI, I treat it the same way, right? Because it's
As you
dynamic.
should.
It's making a judgment, right? It's doing some probabilistic thing based on the llama model or whatever model that you choose to use, and as a result, but the efficiency there is that that it's pulling it out and writing it out in seconds.
Yep.
Right. And so there is definitely that productivity improvement as a result. And maybe the person who used to be doing the data input or the data extraction from the contract, now they can be the reviewer. Now they're doing a little bit more impactful value added work with the time saved, et cetera. So, that's kind of my views today on like where AI is trending in terms of helping out our processes. Maybe one more question on just like where FinQuery is. You guys recently raised it around.
Yep.
Yep.
Back in April, 25 million. So that was from Parafos and Lavelle Capital. So yeah, that was super exciting. We've had, like I said, just still slowed down a little this year, but it's still just been really putting a lot of R&D into the lease query project itself. We released earlier this year, like point in time reporting, which was a big feature release for us. We're still developing that prepaid and accruals. And then one product I didn't mention earlier that we also have is our spend management, financial spend management. That really digs in and looks at your licensed user count, like your SaaS spend, more focusing on that side of your spend. And so that's one that we purchased back actually about a little over a year ago in August of 23, and really been putting some R&D into that to get it to where we want it to be. And so, needed to raise a little cash to keep the company moving forward and also pay off a little bit of debt, line of credit we had. And so, yeah, it was really exciting to get to go through that process, meeting with these companies, telling them what our future plans are, and we're really excited to have some good partners come in and give us some funding so we could pay off some of that debt and also continue the growth we're seeing here.
Can you walk me through like your end-to-end process with the round? Like, well, what role did you play? How did it all come together? What are the things that you would tell somebody else that's like working through something like this to look out for?
Yeah, well, we'll start with my role. So we're very lucky. Our CFO is ex Goldman Sachs, and so he came in May of 23 and replaced our previous CFO. They brought him in just for his wealth of knowledge around this whole process, and so we've learned so much from him. He knows what buttons to push, what they're going to be looking for, and for us going through that process, really it was being sure you have that good bridge between your accounting and then your actual FP&A team and those deliverables, right? Because some of the stuff we went through was here's the audited financials. Maybe there's not a direct bridge to the internal FP&A financials and forecast, right? And so it's figuring out how do you bridge that gap? Is there a walk across? How are you going to explain that to these investors when they're trying to get back to the audited numbers from the results you're giving them? And so that was definitely a learning process and something I was very involved with, working with the FP&A team on the results they were giving them and bridging that gap. I mean, it all reconciled in the end, but there was just some work to get there to show some of that. And then also just being sure, like you said, even for us, in close, expenses are always the last thing. And those are also your harder thing to model a lot of times, right? Because revenue, you can look at historicals, look at trends, things like that. Expenses can be a little tougher, and so just getting input from me and my team on different spend categories, future amortization of spend, how we're seeing things trending along those routes. So and then on the tax side of things too, there's some questions always come up. We're an LLC pass through, but they want to be sure everything is good to go there when they're coming in or investing, and knowing what their future tax obligations could potentially be from that side of things. So that was a lot of my involvement, but like I said, we were very lucky to have a great FP&A team and also having someone with that ex Goldman experience who has been through this many times.
Tell me about that bridge. So you were at a CPA firm for 9 years.
Yep.
The main focus is GAAP reporting, right? Maybe there's some public companies where you have to do some non-GAAP to GAAP reconciliation on disclosures, but by and large, when you audit a set of financials, it's based on the US GAAP standards, by the FASB, et cetera. Not cut and dry everywhere, but definitely a little bit more black and white than what an FP&A team would put together for investors. So tell me about your transition there, and how did you do you ever push back on the FP&A team about like whether or not, hey, I don't know if this totally makes sense because of your GAAP, right? And there as much as people kind of don't fully understand the rationale for GAAP, there is an investor stakeholder in the GAAP financials, and the FASB comes up with rules to look out for investors.
Exactly. They're trying to get them all to be comparable, right, on the same playing field. And so I'd say our FP&A team does a very good job, especially in the place we're at now. But some of the things like, one thing is because, software companies are all about annual recurring revenue, but that doesn't line up with your GAAP, because for GAAP, it wants you to take that, take your contract value and allocate it to the different things in the contract. So you may give away your implementation services, right? But you can't really not have any revenue for those because it is a performance obligation. So carving out things like that for the GAAP side of things as compared to your ARR, and having some type of walk across of, this is your ARR number. What are the differences to get you to your GAAP number is, I think, a very important one that you're going to have to deal with there. And the other one that we, took us a while to get on the same page is, and also for my team to be doing it, a lot of those more technical ones, capitalized software, capitalized commissions. My team is in a good spot now where we're doing those monthly and quarterly truing up our estimates. But, previously we weren't recording that monthly. We would wait till year end or quarter end to get an entry in to book those. And that can really mess up your FP&A team if they don't know to strip out that amortization. And, so getting on the same page with some of those things, and it can make it look really wonky if you're only doing it as a December entry, right? Or instead of having some type of monthly estimate where it's trending the same there. But I'd say the bigger piece on that was like, as far as the gap and recognition, we've had to work a lot with, like our RevOps team, and just getting them to know, hey, when you change products and items in Salesforce, like that impacts us, right? We need to know, like, what is this type of item? Like how is the what's the recognition? Is this a service item or a software item? How long is it taking to do these services? Those sort of things. But that's one that actually took a little longer, but they always loop us in early now if we're going to have new product codes, or, like this new prepaid and accruals. How are we going to sell it? Are there going to be different pricing tiers, like things like that? So I'd say, both sides of those kind of go into that ARR GAAP number, but those have been two that we've really spent a lot of time wrapping our head around and cleaning up.
You just talked about a lot of things that, well, I think they have a common thread in that, right? You're working at FinQuery, you deal with non-accountants all the time, and you have a deep understanding of the day-to-day process and the systems that support those processes. Like where did you learn that? Like, is that something you looked at when you were doing audit? Or like, tell me about your transition from being an auditor to actually working through the day-to-day as you just described.
Yeah. As an auditor, you're coming in, and if anyone with ex-audit experience, listen to this, like, there's a lot of checklists, right? A lot of kind of just check the box things you're going through. But I think a lot of the work I did really with those first year companies, first year startups, maybe it was their first year, having an audit because they got some bank debt or some investor debt, coming in and working with them.
And just to clarify, you're saying that when you were at Cherry Bekaert, you actually had a group of or a lot of experience working on first year audits for like early stage companies.
Yeah. So that we would, our partner's really good at going to a lot of, venture events and things like that, and bringing in these companies that had never been audited before. It'd be the first year they were having an audit, and, we would come in, they would think they were audit ready. And we would get there and we kind of be like, well, you haven't, it was really the technical. They would do the day-to-day kind of billing, collecting, disbursements, but it was the technical, like 606 revenue, lease accounting, capitalized software, capitalized commissions, where we would have to, hey, like this isn't where it needs to be. Like this is we can kind of give you an idea of how to get there, but we have to maintain our independence. And so it would be working through those processes with them that really taught me a lot about these technical and kind of all the different areas that play in, because we would have to, maybe the accounting team didn't fully understand it. So we'd say, hey, we'll hop on a call with y'all and the sales guys. Like, how do you sell this? How does the product actually, the product team, how does it get implemented? How does it, how does the customer utilize this? When do they maintain access to the system? Like a lot of that. So knowing all of those points, but then also coming over to FinQuery, when I joined, the team needed to be kind of reshaped a little bit. And so that left me with an accounting manager position up under me that was open for about 6 months before we were able to find our amazing accounting manager we have today. So that really forced me to have to dive down into the weeds a lot. And
had you been audited before?
So we had never issued an audit. So we had started some, but it was really the 606 that even held us up when I joined the company, because we had tried to do it outside of the system and it just wasn't able to get there. So we implemented it into NetSuite and used their revenue recognition module. And so that was one of my first tasks when I joined. But yeah, shortly after we got it issued, and have had a clean opinion ever since, which has been really exciting.
Tell me about wealth of knowledge, audited lots of companies, early stage. I'm sure you also audited more mature companies, but like, what was your 30, 60, 90-day plan? Like, what was your ramp up plan when you joined FinQuery, by the way, without an accounting manager, right? Like, how did you think about that ramp time?
Yeah. So 30-day was really just like get to know the team. I kind of was at that point, you have to let them do what they're doing, because you're still learning. You have to figure out where the gaps are and really coming in. So it's really that 30 days is kind of getting through your first close, I would say. And I quickly realized, that our close process was in a Google Drive doc with just check boxes like cash, check, AR, check. I learned that some reconciliations on the balance sheet were just running balances, right? There was no detail of, what makes up this total. It was just, oh, this was the activity this month from last month, sign off. And so it was really teaching the team and doing some investigative work myself to figure out, some of these reconciliations and what made them up and cleaning up. So that was lower level. And then also getting some better processes around some of the really business important things, right? Like we were having some issues with billings going out that we had to get, we're having multiple credit memos. So figuring out what those issues were. And it turned out like it was between the sync between Salesforce and NetSuite. We were having some integration issues that needed to be fixed. And then, on commissions, we weren't getting those calculated as timely as we should. So getting a lot better processes around there. So that first 30-60 was kind of around learning and also like business critical. And then I would say once you got past the 60 was more around GAAP technical, 606, start looking at the capitalized software commissions and building out a plan for those. Cause that stuff is very important, but what you don't understand as an auditor that you quickly understand when you come over as controller is like, they're really worried about running the business and getting cash in and deals closed, right? Like, as an auditor, you sit there like, why aren't they getting me my PDCs? Like, I gave them the list. They aren't sending anything over. Yeah, it's because they're trying to make the most money they can for their business, and the audit is red tape that they have to comply with, right? So you have to prioritize and get done what needs to be done for the company.
Tell me a little bit about you came in at FinQuery, and you actually provided a lot of this technical expertise, right? Mm-hmm. And then there's this other side of it where there's all these other folks with just experience at the company. One of the things that I've always, I don't want to say struggled with, but like I always just keep an eye on it. I try to make sure like I have some resiliency within the staff, like in case there's turnover or people move on to another job, et cetera. I'm curious, like at FinQuery, how did you try to approach that?
Yeah, and I think that's very important also. Like I have a team of 5, and so we got a billing collections specialist. Then they both roll up to the accounting manager who reports to me. And then we've got a staff accountant and a senior accountant that roll up to me. And that's been something the whole team has worked very hard at, is cross training, being sure we're all on the same page and looping each other in. And I've really tried to do that. When I first started, the accounting manager came on and filled that role, and that his two people reported to me for his first 6 months to give him time to acclimate. The senior accountant we have now was a staff accountant when I joined, and we've since promoted him and then hired that staff accountant under him. And when we first hired her, they reported to me. I gave him some time to understand management and learn, and then we eventually rolled them under them. So it's kind of been a slow transition from kind of a flat org where I had everyone reporting directly to me, and I was having weekly check-ins with everyone, and kind of being everyone's direct boss to say, okay, like I'm going to empower y'all to take these people under you. I'm going to move my one-on-ones to every other month or monthly, and they can bring issues to me through y'all, and I'm going to allow y'all to manage them and grow. And then I'm going to continue to take tasks and delegate them to y'all, pull y'all into additional meetings to learn. And they have, the senior accountant and the accounting manager have both been great about taking additional responsibility, delegating things themselves, which I know can be very hard, right, when you first get into those roles, to let things go, and just really allowing me to push more to them and allow me to take more from, the CFO and from other parts of the organization.
And how many employees does the company have in total, if you don't mind me asking?
Full time, we're around 235, and then we've got a lot of development contractors and all that we utilize also.
And like, tell me, like man, when Brex was around 250, I think I had around the same size. Maybe a couple more. Maybe I had like 6 or 7. That's a lot to get done.
Oh yeah.
Like I remember those month-end days when we were, it's just a lot to get done. How have you managed to keep the team relatively lean, so to speak?
It's a lot of support from the CFO, with the previous one we had and the current one, around like really relying on like automation and tools, right, has been very important. So, since I've been here, we implemented Flowcast once we realized the close process was quite a mess. And so that's been really great on helping us. We were closing in probably 10 days when I first started. We've got that down to 5. And that's 5 days with having, kind of like everything done. Like I said, some estimates for cap software, commissions, having that revenue ran, all of that in there, which has been great. And then it's really, okay, so step back, and what are other areas where we could potentially, save time or save from hiring another person by having solutions in place. And another one I mentioned was our billing. Was kind of a little bit of a mess when I joined. And so collections by default start getting aged and you start having issues. And so at one point we had, 2 contractors in here trying to help clean it up. And it was like, okay, this isn't working either. It's just too much of a manual process. And so we implemented a tool called Tesorio, which is like an AR CRM that kind of sits on top of your Salesforce and NetSuite and pulls in the data, and is really easy to build out campaigns. And they're launching all kind of new AI features and functionality. But that has allowed us to, only have one collections person who is doing all the collections and using that system every day to send out those campaigns, to do outreach. You can, to do tags in there for customers. You put in promises to pay, and it uses its own little AI algorithm on like collection issues and to tell you how much it thinks you're going to collect. So, using that, and then even from the travel spend, like looking at platforms like Brex, who I actually had a call with your team today, demoing y'all's premium product from the essentials. So, but using things like that for expense management, travel, just having one more controls around that, in addition to, that sync with NetSuite is invaluable, right? Having that sync over and be able to be approved in the system there, from that. And then, so it's really just looking at that value proposition. Like, what is it worth the dollars to spend for the time you're going to save for these different tools? And in all these cases, they've paid dividends so far.
So let's dig into that a little bit more.
Yeah.
What you're essentially asking yourself when you're looking at all these processes is like, are you getting the right ROI in exchange for paying for some kind of service, etc. Like what are the markers for that? Like do you think if you didn't have these services, you would therefore need like two extra headcount, for instance, for your AR process, or like, and then the tutorial costs X is less, and so obviously it's a no brainer. Like is
Oh,
it
for
just that
sure.
simple in how you think about it, or like, you know what I mean?
Yeah, no, for sure. I mean, there's different, I guess, ways we've used. Like the Tesorio was definitely a no-brainer because from what they said it would do, and kind of we talked to some of the customers, but it has decreased our day sales outstanding from like 55 to like 35
Oh
days, and we've
wow.
been, yeah. So that's a very easy to see ROI, right? If we're pulling in cash that much sooner from these customers and having that outreach, like that one was kind of a no-brainer once we heard some other people saying that had done similar things for them. So yeah, and getting rid of that second contractor was, that contractor was costing us way more than the annual cost of this software. So for some
You
of the
kind of
other
got a double
ones,
solve. You got a double solve there, because like oftentimes when I talk to people about putting in some automation, they have some process in place, and all they're thinking is like, okay, I have this many costs to run this process manually. It's a lot of work, but if I automate
mhm,
it, then I don't have to spend so much. It's just like straight ROI on the cost side. Where you're talking about is that you use automation to actually improve core business KPI,
mhm,
like
by a
day
lot.
sales outstanding, right? Like I think that's actually really interesting. And like, how do you guys go up? Do you find that you're in charge of more of that stuff, and so therefore there's all these opportunities across the board there, or like how extensive is the automation practice within FinQuery?
I mean, we're always looking at different tools. I mean, I'm sure you also get reached out to vendors every day, right? And I'll give them a quick glance, and if it looks interesting, I'll have my team. We're not scared to take a demo to see what are the new tools out there, what is the new functionality, right? Like you can't look at every one of them, or we would just spend our whole day on demo calls and things we weren't really interested in. But always up to seeing like what's out there, being sure we're on the latest, the cutting edge of things. I mean, one thing that has really helped us too, which actually came in as more of it was an engineering and an accounting, but we use a tool called Jellyfish for our software capitalization. And so it plugs in with Jira and GitHub and actually, looks at what the users are working on. And so for any hands-on keyboard developers, that took out all the time we used to do with like analyzing tickets, like pulling that data and trying to make these estimates right around like, oh, what is the average capitalizable time for this group of people, or what is their average salary? Now we can just throw in the salary data, pull the Jellyfish report that shows how much of their time was spent on capitalizable tickets, and we can run that capitalized software for the hands-on keyboard people much quicker than we could if it was a very manual process. And we've gotten through our audit 2 years in a row with that, having that software with no issues. And so and that was a no-brainer too, to keep that software. Even when our engineering team decided they didn't need it, we still kept it for the capitalized software side, just because it made it so much easier having that kind of algorithm as opposed to having to do some big ticket analysis and look at all the Jira tickets and go through that.
I gotta get this straight, because I get a lot of emails. I don't know how. Maybe it's just I'm not gonna give out my email on this podcast, but I have a relatively easy email, and I guess maybe like people just get it right, and so I get a lot of emails from vendors trying to sell me this automation, this AI, blah blah blah. I'm just curious, like, what are the things you look out for that makes you pick one vendor or take a call for one vendor versus another?
Is it a problem? Is it a problem that has came up? And sometimes sometimes these guys get lucky, right? It's something top of mind.
Mm.
And I'm not going to say I read I do. I'm not afraid to hit the spam button on them either, for sure. But are also like, I know I can't look at all these. So, my accounting manager, senior accountant are good. I can say, hey, like I only glanced at this, but it looks like something that could be interesting. And I'll forward it to them and kind of, put it in their court. Like, hey, if y'all think this is worthwhile, we'll take a look. And we're not on demos like all day every day, but I'd say probably 2 a month maybe we'll check out new products just to see what's out there. And then even if it's functionality that maybe a product we don't have, then we can reach out to our current provider and be like, hey, we saw this, it was really cool, is this on y'all's product roadmap at all? just to get it out
Maybe,
there that, hey, this is something we're interested in.
maybe that's a good KPI actually. We always talk about KPIs for the team to like day sales
Check out new
outstanding, for
products.
example, or like, time to process an invoice and these more operational things just for the day-to-day work. But maybe a KPI that I need to actually think about for the team is, hey, did you do your 2 demos this month? Right?
Yeah, I
And
don't think it could hurt. I mean, just see it, and because there's always these new startups, right? I mean, I know y'all deal with it just like we do, right, on as competitors, but also some of them that we could utilize, on the accounting side, and especially with AI moving as quick as it is today.
so Jake, we spent a lot of time thinking about different ways to automate your processes. Obviously, there's ROI if it's successful. I mean, I actually have scar tissue from, yes, there's been a couple implementations at Brex that just aren't as successful as I would have hoped.
Hmm.
Sometimes those implementations aren't actually, I would say they're just not anyone's fault. We kind of thought that the process would be X. You automate the process as X. And then what happens is like a business changes or like something changes with the process that you can't help. And then what it will take is like a huge reconfiguration of your automation, and like you don't know if it's worth the ROI to re-implement something for this change.
Hmm.
um I don't know, like how do you try to balance those aspects of needing to be dynamic with the process that you're automating, but then thinking that, okay, if I automate this, it's kind of like I've set it and forget it kind of thing, you know what I mean?
Yeah, no, I mean that's a big risk, right? And that is where I think that, I mean, we're a good sized company. We're not as massive as a Brex or some of these other ones, but I think that's where it's really important for your accounting team to be. We have a meeting every other week with our RevOps team, right? Talking with the sales team, like it's that once you get these things in place, like the revenue recognition in NetSuite, you have to make these other teams very aware of the processes you have and how their decisions could impact those or cause issues. And so our RevOps team is very aware of that. I would say that our sales team not as aware or does not care as much around like our commission software we have. We utilize Spiff for our commissions calculations, and I don't if anyone on the call is familiar with them. I mean, it's so user friendly as in the fact that it uses kind of Excel like functionality, but if you have some complicated commission plans, they can be hard to build out in there, and you could end up having to hire a third party to assist.
Mhm.
And so, it's really around making sure that the leaders on those teams know the consequences of making material changes and what that could cause downstream. And I think that as long as they are aware, and if they think it's still worth making that change, like it has to be an entity wide conversation of, okay, well, that's going to give additional cost on the downstream if you still want to utilize the software for its intended use, right? And I think as long as you are open and having those conversations, everyone's on the same page. It turns out much better than if they just made the change without communicating to us, right? And then it all breaks um, and it becomes a useless software at that point. So I don't know if that directly addressed the question, but I think that the only way to really keep that from happening is to try to have those periodic or more scheduled conversations and knowing those downstream impacts.
I think what you're talking about is setting the right expectations with
Hmm.
all the different stakeholders. And there's a little bit of like before you implement something, and if you're already meeting with all these cross functional folks and setting those expectations, maybe there's this risk of kind of like quote unquote unnecessary changes or requests for changes that might impact the overall streamlined process to begin with. Maybe taking it the other way, do you ever like run into pushback even before, like as you're meeting with folks, you're generating ideas or sharing ideas on how to automate something? You ever get pushback from folks that like, oh, I don't know if we're ready for that yet, etc.?
I would probably say our product and our sales team, like, they actually like to probably run faster than I would prefer. So it's usually the opposite. It's usually my team that's doing the pushback. I mean, we have it was a group. Now it's just more kind of a saying, but it's still got its leaders called the Get, like, we got to get scrappy. right? We got to make things happen quick. Our competitors are doing that. That's why we try to roll out new products quickly, try to roll it out, like the marketing materials, roll it out in Salesforce. Now we're looking at some different ways that we could get that prepaid and accruals functionality out there quicker, right? As self sign up as opposed to having to talk to a sales rep and different things like that. And usually it's my team that I'm telling them all the ways it impacts us and slowing down the process probably more than someone else slowing down the process for us, because a lot of the stuff we do, I would say, is more internally housed, and we can kind of deal with it amongst our team as opposed to things touching a lot of different systems.
Just one last question, just to clear out this segment of the show. Can you share with us like what your plan? I don't know if you're like me, but I'm going through my annual operating plan process for Brex right now, and we're kind of like thinking about bigger projects that the accounting and finance team wants to work on, not just through the end of the year, but also next year. Like, what are you guys thinking at this point for next year, especially with all these new tools and AI coming up?
Oh, as a team or as a company or both, maybe?
I would say that your team. Let's focus on your accounting team. Like, what are your main goals for the next year?
Yeah, I mean, well, I don't know why this usually happens, and I've seen it a few times, but so we're actually doing an office move now, and that is, so we're downsizing our space, moving to a new space just right across the highway, actually, but it should be a lot nicer. So somehow that has fell on, me and my team to manage a lot of that. And so we're just actually moved to our temporary space, moving to our permanent space once it gets built out, probably May or June of next year. And so, get a bit around that for my team as far as we got the new lease in because that's our software. So we wanted to do that right away. But, doing the build out different things along those lines will be some work for my team. But really for us, it's just continued process improvements, right? Every time I talk with my senior accountant or accounting manager, it's okay, what other processes can we go ahead and pull forward? Can get ready for the audit earlier, be ready for the tax deadlines earlier, continuously just checking our compliance in these different areas. So we're proactive instead of being a reactive organization, right? So we're in a great spot now as long as the team maintains, which I hope they will. But it's more of a process improvement, trying to be very proactive in dealing with these things as opposed to waiting until there's a fire to put out later.
Yeah, I'm a big proponent of being proactive and what I'll call flattening the spike.
Mm-hmm.
And because like if you end up working XYZ hours, like quote unquote just lesser hours, then you maybe could, if you just move more work to the left, then you all of a sudden get this huge spike of work at month end or a huge spike of work during the audit. And frankly, the more of the work that you can flatten, and you can flatten the spike over a longer period of time, especially if you do interim testing earlier, or if you are preparing for month end earlier, or preparing for these changes that you're talking about earlier, frankly, people will have a better quality of life because it's just more consistent. And so
I love going into Flowcast on day one and seeing sign-offs, right? Of
yes,
they did stuff on the 31st or the 30th. I'm like, go team, y'all are great.
That's right. So we always end off our show with this last segment. We call it Finance Leaders Are Fun Too. But, I'm just like, everyone's got a random story or an accounting joke. And I'm curious if you have any accounting debacles that you could share, or an accounting joke that you could share.
Yeah, I was trying to go through. I went through kind of the couple of things to discuss. So the first one I think was like funniest or worst accounting debacle. So a couple of things, like two really came to mind on that one. So I know everybody's probably got their inventory count story if they ever did audit, but there was one where we had to count medical socks, like the socks at the hospital with the treads on the bottom. And
were they used socks?
No, they were new. They were manufacturing them. But like these people had no inventory management. Like it was rough. And so there's a semi parked there, and we're missing like, I don't know, 100,000 socks at this point. They just are unaccounted for. And they're like, I was like, well, can we get those off? They're, the forklift driver went home. Like, no. And so I end up having to crawl through this semi. Like there's like this much room at the top of the semi. And I'm like, yeah, I'm a staff. I'm trying to, like eager to get the count right. I'm like, oh, I got to get in here. So I'm like crawling in a semi to the back, like counting the pallets of socks. And we still were like 100,000 short. So it was not even helpful. But that was probably one of my funniest.
They don't tell you that in college. You're getting your accounting degree. You're going to, go out and do some good accounting work, get your CPA. They don't tell you that you're going to have to count socks in a semi truck, right? Yeah. Okay.
And I never even got a pair. I always was like, you think they would at least offer me a pair of socks for all this work I'm doing?
I'll share a story on this. Like so I was in New York. I was an auditor in New York for a long time. And we would get these staff every year. And one year there was a staff on this job and it was a hedge fund client. And so everyone comes in. It's like, like sometimes a full suit, but definitely at least business casual. And it's like we're doing the audit. It's late nights. And then one day we come in and one of the staff, exact same clothes as the day before. Exact same clothes. And I'm like, what happened? Like, what? Because like everyone actually went home and he had some work to do.
Yeah.
And he's like, oh, I just slept here. I was like, what? He's like, yes. He's like, yeah, it was like 1 o'clock. And, I just finished doing this recalculation of this realized gain loss. And I just, I had to trek it all the way back to Westchester. So I was like, screw it. I'll just sleep here because I knew we had to be here at like 8:30. So I'm like, where'd you sleep? He's like, oh, I just put my head down on the desk here. I'm like, what? And that I hope that folks who are thinking about the accounting profession don't take that story and further decrease the count of numbers. If you do, you should look up Jake and join his community, and he'll treat you right.
Public accounting or auditor. Yeah, I mean, there's always some of those. There's busy times and then there's slow times. So you're going to have some of each, and I think that having those stories is part of what not saying that should be the norm, right? But you're going to have a couple of those stories, and they're always fun to share, for sure.
Jake, it was a pleasure talking to you today. Thank you for sharing your insights and your stories.
Yeah, not a problem. And I got to let me get in my accounting joke because I spent a lot of time on this one.
Oh, you got a joke? I want to hear it. Yeah.
So this one is, everyone's always joking about this topic, but so why is it hard for accountants to make a New Year's resolution?
Why?
Because at work, everyone's always telling you to do the same as last year. Glad that got a laugh.
I like that. Okay. Jake, you're
I appreciate it
very much. Yeah. Thank you.
Yeah, it sounds good. Thank you, Eric. Thanks for having me.
Thanks for tuning in to Controllers Classified, presented by Brex. Brex is an AI-powered spend platform with global corporate cards, expense management, reimbursements, and travel. Visit Brex.com and follow Brex on social to see how they can take your accounting game and your company to new heights.